Charles, thank you so much for joining me on the Founder CEO podcast. Excited to talk to you about your journey. So you are a founder, a CEO, and investor. A great perspective for this conversation. But I want to know what set you on this path.
Yeah, well, first of all, Chris, it's wonderful to be here. Thank you for the invitation. Um, yeah, what set me on this path? So as a young man, I had no interest in business, certainly no interest in understanding of finance or investing. I'm the son of two parents in the education industry, administration and teaching. I wanted to be a writer and a doctor. I always wanted to contribute to people's lives from a young age, just sort of, I don't know where that came from, but it was there. And I'm creative and I wanted to write. So I thought, William Carlos Williams was a model in my head. And that was all the way into college. So, and then first year in college, I was not having a good freshman year. I didn't like the sciences, wasn't doing well. A bunch of other stuff was going on. And I stumbled into a freshman seminar of essentially about religion and comparative religion and philosophy. It was clearly my passion, and I spent several years studying that. And in the process, I wanted to launch a magazine, and this is now back in the 80s. So I wanted to launch a magazine about religion. There was nothing like it. And I had mentors and whatever encouraging me to do this. And I got fascinated by the magazine business, and I thought it was this perfect thing where I could make a living and pursue my passions. And I went off into venture capital to learn how to start a business. So Summit Partners is where I began my career, like 34 years ago, 33 years ago, something like that. And I went to Verona Suler Business School. All of that was to become an entrepreneurial publisher. And then this little thing happened while I was at Verona Suler learning about magazine investing called the internet happened. And
magazine, internet, where is everything going?
Exactly. So the whole thing my whole life plan just sort of went. I was like, I knew enough by then how difficult it was to start a magazine in the analog world. And I knew enough that this digital stuff we were going to really just disrupt everything. And I was in New York. I had a 9-month-old baby, or maybe she was a year old by this time. And naively, I was like, well, private equity is a good way to make a living, so I'll stay as an investor. And I was enjoying it and whatnot, and I just shelved the whole thing, but I never lost the entrepreneurial bug. I still wanted to do my own thing. And, eventually in the mid 2000s, I launched Kamylon to kind of become a institutional searcher focused on the large local business space. And that's what we've exclusively done for the last 20 years.
I'm excited to get into Kamylon, and I want to hear about how your approach to investing is different because of your studies in philosophy and theology.
Wow, that is it. You are the first person who's ever asked me that question. And that is a great question. And it kind of goes right to the heart of me, Let's see.
Tell me more.
So as a fiduciary of other people's capital, and then as a fiduciary of a business and the livelihoods of the people who work for that business, I'd say that servant leadership is probably the easiest, quickest way, to answer the question. The priority and the importance of servant leadership informs our investment style and our management style. And the fact that our whole mission is to help the next generation of young entrepreneurs take over this huge wave of businesses that are coming to market that are owned by baby boomers, and mentoring and coaching them, serving them, which is the key to the whole search investment model success. I think that's what it is. Studying deeply, I still read, I still write philosophy, theology. So deeply reflecting on the ultimate things in life gives you a much better perspective of what really matters, I think, when you're investing and when you're in charge of people's livelihoods, or at least you have a significant influence over people's livelihoods.
Yeah, and your approach of servant leadership ties into the model of. I'd love to hear about the search model. We were talking before this. You'd mentioned it's been around a while. It just hasn't become much of a thing, but it's been proven that the rates of return are actually the highest amongst all asset classes. So please tell us about the model of Kamylon.
Yeah. So the fundamental investment model at the heart of Kamylon is the search investment model. It's also in the academic literature now. It's called entrepreneurship through acquisition. And essentially the 20-second version is it's an investment model that allows an MBA candidate to raise a little bit of money that will fund them and their search for a business to buy for 2 years. So they spend 2 years or less looking for a business. If they find a business, they bring it back to their investor group, usually 10, 15 investors. And if those investors like the deal, they'll put up the capital to buy the company. And then the searcher becomes the CEO of that company. So it's the fastest way for a young, talented person to get into the CEO seat of a company, of an enterprise, and grow it. And the success of that, so that's been around. That model was invented back in the early 80s. It's been around for, since then, and it's been steadily growing in the last, I'd say 5-10 years. It's really hit an exponential curve in terms of its growth.
Does it have to be an MBA candidate?
It does not. The vast majority of searches to date have come out of the top MBA programs in America, but it has begun to attract, say, somebody who was in that program, worked for 2, 3, 4, 5 years, and then has come back and wants to do a search. So that's the more and more of that is happening. And then sometimes they're just people that try to get into this that have no formal business education. So the answer is no.
What would you recommend how someone looks at buying a business?
How someone looks at buying a business?
Yeah.
Yeah. So, there's this massive opportunity set existing in America at this historical moment, which is, the statistic is 500 baby boomer or older owned businesses, right, are coming, essentially the owners of those businesses are hitting 70 years old every single day. So 500 business owners a day are turning 70, and they got to do something with their businesses. And those are the vast majority of those are what we call large local businesses, 1 to say 4 million of cash flow. That's the opportunity set. And that's going to continue for, say, the next 10 to 20 years. And so we would first of all recommend, you have to think about what kind of business to buy. That's a great set of businesses to look at, right? They're big enough where they have upside and they have some infrastructure, but you have to have a level of sophistication and you have to have a level of mentorship to take those over, as opposed to, let's say, a smaller business like you buy a local coffee shop or you buy a local laundromat or something like that. So Cody Sanchez is like this online personality who's doing a great job of promoting business ownership and entrepreneurship through acquisition to, the group. But at Kamylon, we focus on that very specific set of businesses, and we help, young, talented, would-be entrepreneurs learn how to take over a business.
So these people are entrepreneurs through acquisition. In some ways, they're a founder in the sense of they own the business. In some ways, it's a new business because it's new leadership and new ownership. So they're a founder, an entrepreneur, and a CEO. And being a founder is much different than being a CEO. What have you seen in regard to people who are able to make that leap of not just being the one owning or founding the business, but being able to run it well and scale it up?
Yeah, it's a great distinction, Chris, and one that lots of people miss. And it's a very important distinction. In the VC world, there's this whole founder culture that's developed. It's almost like, it's almost like cult-like sometimes, or at least over the last 10 years, it sort of reached a peak where I think it got kind of out of hand.
Yeah, the celebrity founder.
Yes. Yeah, there was this whole celebrity aspect to it that may or may not be warranted. So here you're right to point out that in entrepreneurship through acquisition, you are in a sense a founder because you do what founders do. You go out, you have to sell yourself and your idea, and you got to raise some initial seed capital to get your business venture off the ground. The venture, in this case, is locating a great business to buy and then buying that business and then running it. So the founder's challenge here, usually in a venture deal, the founder's challenge is going from, I've got this great idea, I've sold you on it, I've raised the initial capital, now I got to execute, right? And I got to manage and execute as the CEO. And that's usually the challenge. And some founders can't do that at all. Some founders can kind of get through the first 3 years, but at some point, it's very common for the original founders to take a different role and they bring in a professional manager, right? Um, and here in entrepreneurship through acquisition, the searcher has to walk into an existing culture that another founder created. And that's the challenge for them, right? So it's a slightly different, and it's leadership challenge. It's much more like if you're a military officer and you take command of a new post, and there was a commander there before for 4 years, and now you're taking over. There's a structure, there's an existing, yeah, exactly.
So how do you advise these CEOs to go into those situations?
Yeah, so a lot of this depends on the personality of the searcher, and we do a lot of screening, and we get to know them over the course of their search, which could be 12 to 24 months. So you have a lot of time to get to know them, and you coach them along the way. Assuming you think they've got what it takes to run a business, the first thing we usually tell them is you do not, when you show up, you do nothing. You listen. That is the key. You listen. And before you show up, you kind of hypothesize, you theorize about where the value levers are. And then you show up and you tell everybody that you're not going to change anything. You want them to know who you are authentically. We, of course, emphasize the servant leader model, and the first major message is, I'm here to serve you. Management, upper management is here to serve you, everybody on the front lines. We try to get everybody to buy into that and say that. Most of this generation gets that. You don't have that kind of macho bra, culture anymore. It's much more nuanced. The business schools are doing a better job of, sort of more of a diverse way of thinking about leadership. Anyway, and so we tell them to listen. And then once they've listened at all levels of the organization, they've got to then test their hypotheses that they had coming in about where the value levers are. And they say, nothing's going to change. I'm going to come around. I want to listen to see what you want to change, where you think the opportunity is, right? We think that's the most successful approach of taking charge.
How about what is the life cycle of one of these ventures typically?
There are 4 phases, actually. The first phase is, you're raising capital to fund your search, right? Like that first $600,000. And then you spend a year to 2 years searching, right? So now you're actually looking for the company. Then there's the phase where you buy the company and you run it. And then you got to figure out how you're going to capitalize on it, right? At the exit. And that usually the median, there's been about 700 searches done to date, and the median is, say, it's 6-7 years.
And how about in regard to success rates relative to how most of us think of traditional entrepreneurship, like going and raising venture money or bootstrapped?
Great question, because search truly is its own asset class. It has a very different risk reward profile than venture capital on one side and standard private equity buyout control investing on the other side. It sort of sits in between from a risk reward standpoint. So if you had 100 searches, about 60 to 65% of them will find an acquisition. So they'll close on a deal. And then of those, about 25% of them will generate a 5 times or greater return.
These are this across the landscape.
This is according to Stanford's research of the entire, all searches that have ever been done. Yeah. So,
oh, wow.
So it's not just our data, right? It's sort of the asset class data. And then, and then like the rest of those, the other 75% are generating 1 to 5 times, they're kind of returning capital. There's some gain. So the loss of capital is much less. So the return distributions, where in venture, you're looking for at least 1 unicorn and a couple of so-called centaurs, right? And then maybe half your portfolio you lose capital on. Here you lose capital on much less of your portfolio, and you're not reliant on 1 or 2 big deals. You have a much greater dispersion of 5 times or better deals. And that's much better risk reward profile than, private equity itself.
So part of the model is some of the people you're funding won't even start a company.
That's right.
Yeah. Or take over a company.
What's really interesting here is search is about optionality, and the way it's very inexpensive to have the option to back a very talented person. It might cost $50,000, $60,000. And the way the whole thing is structured, much of that is returned to you. They're very inexpensive options, is the way to look at it as an investor.
Okay. Where do you think artificial intelligence plays a role in these legacy companies? Is a lot of the opportunity in changing up workflow and being familiar with digital workflows, et cetera, AI
Yeah.
automation?
Again, really great question. I was just at my 30th business school reunion, and there was a lot of talk, obviously, about AI. In fact, we had the good fortune of, I guess, one of our alumni runs a major segment of Salesforce. I think he's the chief product officer. Anyway, he talked to us, and they've been a leader in AI for some time now. And one of the things he said is domain-specific AI is, he thinks, where a lot of the value is going to be created. We use it in our own operation, and we think that there's a great upside specifically for this large local businesses, because you have to think of what the profile of these businesses are, right? So the owner's 70 years old, somewhere between 50 and 70, let's say, and which means they're unlikely to be digital natives, right? They're unlikely to have a lot of comfort for that. And in the last 5 or 10 years prior to wanting to sell, they've been making more money than they probably ever expected in their life, because it's sort of like, why take the risk? I've got a great life.
I'll take the millions.
Yeah. And so so just to give you an example, you can't believe how common it is where you find this great business, 2 million of cash flow a year. Owner has a great lifestyle. The team knows what they're doing. They've just been kind of bumping along, growing very slowly, and they have no sales force. It's always been the owner.
Yeah. So what are the top elements of these businesses that you guys are buying where you say we can multiply it here and here? Like, what are a few of the top elements?
Right. So, you have to remember that the CEO is inexperienced. They've never usually they haven't run much of anything. I mean, we do work with veterans, and so they have had some leadership and, experience. Sometimes people have had small businesses, but in general, they've never really run an organization. So you want a business that's robust. It's hard to mess up, right? So if it has recurring revenue or contractual relationships with customers or repeat customers or something like that, where if you make a mistake, your whole business doesn't, sort of blow up day two. We're looking for those kinds of attributes. You want enough profitability so that, again, you can make some mistakes. Usually when a searcher takes over, they've got to restructure some things, right? So they have to bring in some salespeople, and they got to do this and they got to do that. And then, of course, that depresses historic earnings. And that's how they invest, to then grow. Recurring kinds of revenue, not very capital intensive, right? So, where you have to have a lot of equipment. In an industry ideally that has some tailwinds, it's sort of a growing market, but not always. There've been very successful commercial landscape companies that have been built, and very successful, like AR processing companies. So can be any kind of industry, and there are gems everywhere. And so, these folks go out there they're hungry, they're talented, and they've self-selected themselves, right? They could searches at the top, 6 or 7 business schools where they have, courses on it. And it's really nowhere else. So these folks can go off and make, 200 to 300,000 a year, and they're going to take half that, to go do a search. So it takes a really certain kind of person to do it.
Okay. What are some attributes about those people that
the searchers? So coachability, humility is really, that's, again, it ties back to servant leadership. We think that humility is it's kind of the superpower, silver bullet, to be a great leader. That self-awareness and that ability to be humble, sales skills, and a fire in the belly. We screen for this kind of stuff very early on when we're talking to people, right? And we gather data on it.
How do you screen for them?
So when we first meet them, we're talking to them, and we have sort of me and my partners, we have a bunch of criteria, like I'm listening to you, that we grade. They don't know. Well, they will not if they listen, but that we don't like put them through some sort of test, but it's our interactions, and we then subjectively grade, and then over time we track and calibrate our assessments so that we get better at identifying this stuff. But those are probably 3 of, say, the key early signs that somebody you want to back.
So what are some of the industries that you're seeing?
As I say, it can be pretty much anything. There's, people are not trying to become real estate developers. The search community will not back that. If you came to me and wanted to drill for oil and be a wildcatter, we wouldn't do that, right? But when you think of business services and you think of retail services and various types of technologies, but the biggest categories are probably health services, written health and health services, broadly defined, business services, broadly defined, software technology type businesses, broadly defined. Those are probably the three biggest categories.
I'm going to pivot back to you, and your path and journey. Who's a person or people that had a big impact on your professional career?
Yeah, well, a lot of people, out of the academic world, there is a philosopher named Hilary Putnam. There's a business school professor, Lynn Sharp Payne. Well, Hilary, I studied with him as an undergraduate and graduate student. And then I maintained connection with him over the years and just thinking deeply about stuff, right? So all the stuff we talked about at the beginning, encouraging me to constantly be intellectually curious and moving forward and thinking deeply about, truth and values and the connection between the two. Lynn Sharp Payne was one of the first to run an ethics program at Harvard Business School, and she was excellent. And so the importance of ethical leadership and what that means and how to think about that when you're running a business organization. And so that was really, I think, quite instrumental. And then Rose Stamps, founder of Summit, was, I was a junior guy, but he was influential in many ways. Marty Mannion and Tom Roberts, who were two young partners at the time that I worked for, were really terrific, just brilliant guys and great people. And I learned a lot of how to think about business. And with Marty, I learned how to hear and know.
Yeah,
I learned how to hear and know as an investor.
Forward. What you're a founder, you're a CEO. What gave you the guts, the gumption to take a leap like that?
So at the heart of Kamylon's origination strategy is proactive searching for businesses. So we never do deals. It's actually never where we won an auction. Right. So we don't participate in auctions. So we're always proactively trying to find, make a connection with an owner, speak with them, develop a relationship, and then buy a business. Right. I learned that at Summit Partners. Right. So at Summit was one of the very first private equity firms to do this idea where you train young people right out of college to cold call and cold contact CEOs of companies. So I contacted, 3,000 in my day at Summit. And as I was doing that and listening to their stories and getting to know them, it dawned on me, it's like, these folks are no smarter than I am, and they're no more capable than I am. I could do that. And there was that iteration over time and listening to those stories and talking to those people and getting to know them and realizing, I could do that. And so the combination of wanting to launch a magazine and getting the confidence from, making those cold calls, that's what did it.
That's awesome. How about a moment where you said, "Oh crap, like I shouldn't have done this"?
Yeah, there's lots of those moments. So, bad investment decision where it just, I got a buck stops with me, at least on this deal, made a decision to invest in a business. And I think as I look back, I kind of violated a couple of rules of, kind of rules of thumb that I should say I rationalized around them a little bit. And it's just been, it turned into one of these long dragged out, problem investments. So you have to stay disciplined. It's very important to stay disciplined. I mean, Rose Stamps used to say, deals are like buses. Another one always comes along. Never fall in love with a deal. And
don't search while hungry.
Same kind of concept. Yeah, exactly.
So I'm going to go back to your philosopher mind. I want to hear about large scale implications of artificial intelligence.
Sorry, we didn't talk about this.
Impact on society.
It's really hard to know, to tell you the truth, from my vantage point. I get very concerned about the folks who are running these businesses. I mean, I remember when Facebook emerged, and it was so obvious to me that there was no thought being given to ethical implications of the technology. And so when you have typically young, privileged, men launching these businesses, very few of them seem to have been trained or educated or really care much about that sort of stuff, because they're very technical, they're engineering focused, they're trying to fix problems, solve problems. They think that's what's cool. They think that's how they change the world, and they don't think about the implications. And I remember my daughter at 10 or 11 years old saying, I'm not doing Facebook anymore, Dad. And I was like, really, why? And she said, they keep changing my preferences. So I spend all the time and I set them. And then every couple quarters or something, they just sort of quietly change them back.
Yeah.
And so she didn't trust them. And so AI is the same way. Although the good news is we've been through the first generation or two of social media and the internet, Web 1, Web 2, Web 3, and we've seen some of the implications. So there's a lot more focus right up front on the implications of AI, but it's happening so fast. That's the problem, that I think we're already behind the 8 ball. And
you mean in terms of corralling what could happen, kind of genie out of the box?
Yeah. I think the genie's out of the box, and it's going to have a lot of negative implications and a lot of positive, just like social media.
Yeah.
Lots of great power, like the kind of work you do. And then there's a lot of stuff that's not so great, that messes with young people's minds and hearts. And, so you have both, and it'll take a few generations to sort it out probably. But the power of it is just stunning how powerful applying AI to various tasks in business can be. And so it doesn't have to be, we don't have to be afraid of it, but we have to really be on our guard.
I got 2 more questions for you.
Sure.
One is, who is an entrepreneur you admire and why? And the other is, best advice you ever got from who and what was it?
Well, I think I gotta say probably my father-in-law, who's passed away, eternal be his memory. He was an immigrant from Greece, grew up in Nazi-occupied Greece, was starving as a 9-year-old, bloated, distended abdomen, saw friends shot because they stole a potato or something like that. I mean, really, really difficult childhood. Joined the Merchant Marines after the war and eventually ended up in Massachusetts. Started at a leather factory, then began painting on the side, painting houses, and that sort of developed into a real estate development business, and it's pretty successful in his large local area.
Love
and
that.
He stayed very focused on his community. And his humility, his combination of his faith, his religious faith and spirituality with his business, his focus on he knew all of his tenants and their lives, just that there's a lot of kind of leadership and way to run a business that was powerful and valuable, just sort of watching that over the years.
That's awesome.
So that's, I'd have to say, that's probably the one that had the most impact. But probably, from my father, it was basically about, the importance of my faith, I'd say. I mean, to be very honest, that's at the very core of everything, and keeping that at the center of things. And sort of his example of that, but he would always give me various pieces of advice on how to do that. So I'd say that would be it.
Well, thank you so much for sharing.
Well, listen, thank you, Chris. I mean, great questions. Really enjoyed this interview.
Thank you. I appreciate that. I love asking questions. I love the heartfelt answers you gave. Thank you for explaining the search model to us. Best of luck.
Yeah.
Thank you so much.
All right. Thank you. Bye-bye.